Markets are actually preparing for this. It's just another day, and you are going to see Fed coming out and doing what they regularly do. So here, the anticipation is like 50 to 75 basis point hike. Majority is going for that, and there is a minority who is suggesting there is a huge possibility for 100 basis points hike. So the current target is still there, it's fine. So if you're actually looking at this, last time they went for that. But right now it is changing slowly because of the last inflation. So what will this do to you if you are in this market? This is something really interesting you need to look at. If you're watching this right now, you are looking to improve wherever you are. If you are among the 64% at the bottom, now you really want to push yourself up, reaching here, the top area. Now understand this, if you push yourself above $100,000 and if you have already achieved that, now you are in the top 10%. That is not an easy task, and that's not something small, because a lot of people are already here above $1 million and they're trying to go 0.01%. Fine, great, good for you. But in this market, when you're here and right now the market is preparing for something heavy like this, you also need to look at that, because the next inflation announcement is going to come in August, and before the next Fed hike, you're going to get two inflation. So you need to kind of anticipate that and prepare yourself, because right now the market is showing you a lot of different indicators. You need to understand that there are people who've been talking about inflation, saying, okay, that's not going to stay. And right now they agree. Even the Fed does agree on that point. But on the macro perspective, you can see how things are evolving. BIS, when they put out documents like this, it's not for us usually. It is actually for the central banks. Right? So central banks actually go through these readings and their findings before they do something. You go to any central bank reports, you will see them citing or referencing central banks here in Bank of International Settlement. So that's like an area where they all focus on, and what they look here is really interesting. So if you understand how things are evolving, they are not moving out of crypto. They are moving into crypto. So if you want to make money and you want to climb up, you definitely need to follow the direction of the money. If money flows into this direction, you can't afford to move to another direction. Here, if you are an XRP holder like me, then you're looking at this and asking you that question like, do you really think SEC is there trying to protect the retail investors? I personally don't. With this stuff, I personally don't. It's like they need to have a conversation with the retailers, asking you what they have done wrong, what they can do, right, to solve this issue. But they're not actually doing this. Rather, they are opposed to this and they are opposed to this. So John is trying to fight for all of us, and they don't really want him to do that because they are getting cornered. But in this market, you need to look at the charts and ask that question, okay, what do you see right now? Because the FOMC is here. You're going to get Fed hiking soon, maybe 50, maybe 75, but most likely 100 basis points. And how can that impact the markets? Because the markets cannot take too much. I've seen a lot of different inflation from a lot of different countries, from the members sending that to me, and I'm like, wow, some of these areas are crazy. So now let's actually dig through the price and see like what the short term shows you, what medium term shows you, so that you know where to look at if there is volatility to the downside or to the upside. Welcome to the Scientific Investor family. As we talked about this for a couple of weeks now, saying wait for 26-27 to evolve, see how the market prepare for the Fed hike, and then slowly prepare yourself. So here on a 3-day chart, say a medium term outlook, right now you get this. The MACD is kind of double bottoming where the price is trending lower, And if you observe this RSI from here, it's showing you a bullish divergence. So indicators are slowly turning positive, but the price broke higher and it's trying to come back down. So if it drops back on a macro, it suggests like, okay, 0.3, 0.31 is going to be the support. Great. But right now, the short term is like this. You may actually drop. You were being respected by this level or rejected by this level. And right now you broke higher. You're coming back to retest that zone. So it's like 0.33. So short term, if you bounce, 0.33 is going to be your support. But most likely, the medium term suggests to you like it can be up to 0.3. So another 10% drop from here is not going to be a big deal. It's still going to be about this range which we have broken. Now we need to maintain that and stay ahead, because at that time you're looking for the Ether, what Ether can do, and then you're looking at Bitcoin, what it should do most likely, right? So Ether went above this, it broke higher, and it did not actually come back lower to do this retest. So right now you can anticipate like, okay, it can come back to the 21-day moving average. So that would be somewhere close to 1,300, 1,350. That is still possible, because if you are looking at this, you now know that trend line goes somewhere here and you need to come back down, because the RSI went a little bit ahead of itself and it showed a bullish flag first, but now it's slowly breaking to the downside. So I believe the price will also break to the downside and it may come to 1,300 or even 1,250, close to that range. So that's for Ether. Now, if you are looking at Bitcoin, this is what the market shows you. You went up, fine. Now you're coming back to test the moving average as well as the support. The previous resistance is turned into a support right now. So 21, 22 range is going to be a great support in short term. You need to see what the macro suggests you. So when you actually go on forward to a medium term, a long term chart for Bitcoin, it kind of gives you that idea of what the market is about to do. So on a medium term, what you're observing right now is the price went to test the moving average, but it's slowly getting rejected. So if we don't bounce from here, that is not going to be helpful. We may come lower to $20,000. That is still a huge possibility. Now, what is interesting here though is this. You kind of got a double bottom pattern here, and usually whenever you get this, chances are high that you may continue to the upside. So to keep that alive, you need this trend line. You're going above this trend line. So as we cool down, you need to bounce above this. Now, that again takes you to medium to long-term scenario where this would be coming into play. Okay, if you happen to bounce from the support, trendline support, which I'll turn the color into a different one. So if you bounce from this red line, you now need to break through this black line. That's your overhead resistance. So if you do, now that's really bullish. So you go higher. Fine. Now that range is 41. Usually we say anything above 50, 55 is turning bullish, and about 60 is bullish in terms of RSI. Now we need to get that. Now remember, this is not on a daily. This is on a 3-day chart. When you go on back to a daily, you now know even after the drop, we are like 50, close to that. And that is not bad. But we can come down all the way to 40 in terms of RSI. Now, if you take a step back to see what the macro scenario is like, this is what you see on a weekly chart. Here, if you connect your resistance, we are still respecting that level of resistance, and this level of support, you are still inside that. So that's actually a great thing to see, but you don't want this to break to the downside, because if that do, that means you're coming all the way back down to 17. But let's see how the markets are evolving, because right now I don't think that it can go that low. Fine. Now, what is another probability here is this level of support, which you're eyeing the price for coming back up to retest. Because if you go on a daily, you see like the price dropped way from its 21-day moving average. It bounced and it came close. It went a little bit above that. But right now, you can see that, okay, the moving average has been tested. On daily, we broke that. On a 3-day, we came back up. So it was from 17,000. all the way up to 25,000. We touched the moving average. So next one is on your weekly. So on your weekly, your moving average is close to 31. So say for time being, as the moving average comes down, the price come back up. Some may close to 28, 30. They may meet. And that's what we actually want to see. Fine, you drop to the downside. Okay, that was bad. We all accept this move. But now we are coming back all the way up. You should be retesting this range. And that range is $10,000, which is like 50% up for Bitcoin. But altcoins may actually do even better. When Bitcoin does 50%, if altcoins are moving up, some of them may actually really do much better, maybe 500%. Who knows? So we are going to look at the BTC dominance for the time being and see like, okay, whether the dominance is trending down, whether the dominance is going up. Right now, you are still inside this pattern where we've been trading from some time. So the bottom was here last year, May. So it's more than a year and a half, kind of close to that range. And now, if you are below this moving average, you may test the moving average and then go back down. So we are all waiting for that move to the downside because this is a weekly. The MACD is crossing to the downside. RSI is still above the trend line here. We do agree on that point. So if you break to the downside, that's good for altcoins. If you bounce, that's not. Meaning alts will stay afloat, but Bitcoin will slowly bounce back to that 30,000 and alts will be slow. So for that matter, we go back and look like Ether BTC. If you remember, we talked about this. Ether BTC was getting close to that resistance. It was trying to break higher last time when we were discussing. And right now, if you connect this trend line, what you can observe, it's like it kind of touched that resistance, tried to flirt with that level to break higher. But what happened? The price is slowly getting rejected. But the positive stuff here is this. The price is still close to the resistance and above the 21-day moving average. So that's on a weekly. That's substantial actually. Because when you zoom in, say medium-term scenario, on a 3-day chart, this is what you're observing. The RSI kind of broke higher and it's still staying above. It didn't get rejected way back. So that is like, okay, you still have possibility maybe next couple of candles. This is a 3-day candles. So you need 3 days for each candle. So a couple of candles mean you're going to look for next 1 week. If you're able to break through this, that is going to be a great signal saying that the market can go higher. And how much can be the biggest rally? It can be around 40% and the smallest would be somewhere close to 30%. Say 27 to be precise. So that gives you understanding of if you break a higher, now you go up. Now, to look at what's happening right now, you go zoom in. And what does that show you? The short-term scenario is bad in terms of like divergence. This made a higher high. I don't want to look at the red. Let me put that back into black. So now this is making a higher high, whereas the RSI on a daily suggests to you it's trending lower. So that's a sign that, okay, price may be cooling off. And if you get another leg down, yes, if you break down, then that's not a good scenario. If you come back and break this to the downside, now we are going all the way back, looking at that 3-day chart, asking that question, okay, where is the next support? So the next support goes all the way back down here. So if the price gets rejected there, you are coming lower to this point. Now, that's on a 3-day, but on a weekly, it suggests, no, you don't have too much downside from here. Maybe another 10-15%, but you're going to get supported by the 21-day moving average as the MACD crosses higher. So on a weekly, when you put that same idea into perspective, now I'm comparing Ether to Bitcoin, but I still think this is going to reflect for the altcoin. So as you broke higher, you're going to come back, you're going to retest. That's going to be there. And if that retest sustains and it bounces like the MACD is crossing to the upside, that is bullish. Because if you are observing MACD, you can see the volume slowly came back up. That's a positive scenario. But yes, you do need to see the price RSI all breaking higher. Last time you came up here, but the RSI did not break higher. Here, the RSI broke higher. You already came up. MACD is crossing. So I'm like, okay, fine. The price is above the 21-day moving average. Indicators are bullish. So I cannot go bearish at this point. I know people are calling for $10,000 Bitcoin, $12,000 Bitcoin, but maybe they are correct and I'm completely off on this one, but at this point, going bearish is super mad, because looking at things like this, Rahul is kind of someone respectable in this space. He looks at the macro scenario, understands everything clearly, and he explains everything easily to understand for anyone. Even if you are here from last 6 months, you can still kind of get an idea of what he's talking. And if you're here from 5-6 years, you now get proper understanding of what's happening. And when you see the money flow to this direction, if you think about taking a step back, moving out of this market, it's up to you. But if you have issues, say putting more money in, don't put it. Now, we all understand the market is so tough right now. I'm also personally looking like, should I put in more money? But this is the best time to put in money because the market is down heavily. But the question is, where's your average for that particular asset which you are looking to buy? If it's XRP and your asset price, your average price is below the current price, it's okay. You don't have to put more money in. If you're trading, that's fine. Now we are going to look at like last 1 week of which asset did so worse and does it have fundamentals. We were talking about quant. We were taking some profit at 105, 106 range and saying, okay, we may come lower, 90, 85, that range. And now it's coming lower. So that means if you are trying to look for an entry, this would be right. But the problem is Fed is coming out on another day. So you may have to wait another day to see where the price goes, because the market is just trying to anticipate what the Fed does. And if Fed is doing anywhere between 50 to 75, that's like, okay, they don't have enough dry powder. They can't push this too much because the market is going to drop. If you have actually seen what's happening in US, I'm really thinking like, okay, where is this taking the world? Because right now we can see a lot of people working for the companies in US. And if US is going on a recession, that is going to impact every one of us. So I was actually thinking about this couple of scenarios. So one is this. Shout out to Al for putting this one. So here it's showing you affordability has deteriorated sharply over the past year. And you really have to agree on that. As the interest rate goes higher, you don't have disposable cash. Inflation is already super high. The grocery price, which used to be $500, is now $700 or even higher if you have a family. Now you are crazy. The fuel price is going up, insurance is going up, mortgage is going up, everything is going up. Just your salary is not. Fine. So at this point, if Fed is doing 100 basis points, it's going to hurt the economy so much. But I still think Fed is going to go for that. Now, one of the reasons for that kind of thinking from my end is looking at what the government is doing. Right? Around the globe, they're putting in more money. I agree. But in the US, what they are trying to put, like the narrative is like, okay, you need to understand this. This is not a recession. They're trying to put a new terminology for recession. And if you have listened to Pat before, he was highlighting this. They are going to change the definition for recession. And that's here. So if you have time, instead of scratching your mobile, instead of watching Netflix, go watch these kind of guys who have made that in life through 10, 15 years of business experience. They have seen different market cycles. They are learning. And if you are learning with them, that gives you the ability to anticipate and prepare yourself. So for me, this is like, okay, they're changing the terminology of recession for that case that they do understand that Fed is going to come out and Fed is going to kick the retailers or common human beings like us. Then your purchasing power is going to drop even harder and your mortgage rate is going to go high, sky high. Now you have a question like, okay, should I put food on my table for my family or should I continue on this mortgage? Rather than that, I can try go finding an Airbnb for a short term or rent. If you move somewhere out of the city, you may find even better choice than this. Because if your mortgage goes up for your house, for your car, everything, now you don't have any cash. So that's one of the reasons why the market's way slow. But right now we are observing that the world of that kind of panic is slowly changing with. Now, remember, Italy is not that heavy, sustainable backbone. They don't have it. They are already having hard issues in the country with inflation and all. And right now you see this. So that's like, okay, they're going to add on free money. the market is going to take that stimulus and the market is going to go up. So this is where I'm like, okay, Rahul is kind of going towards the right direction, where he's saying the market is going to reverse. And as we reverse, when we get this free money coming into the markets are going to take off. So if you are in the right asset, you need to make sure you are in one. Now, I'm not saying you need to be only in XRP. I'm saying find 8 to 10 assets, because we don't know which asset is going to go up first. So that's why we kind of try to trade in between short, medium term scenarios and have our long-term bags in 8, 10 assets, fundamental assets prepared. So when the price bounces, you get to take that profit. So now, if you're observing this market and you're asking this question, we talked about a couple of supports. So we need to maintain that range, retest and bounce. That's what we actually need. Now, if that retest happens in next 5 hours and Fed is going to come out in next 26 hours, then that's crazy. You still have market manipulation. You still have the fear all coming in. So prepare for the worst today. So guys, if you are receiving value for your time, please do hit the like button. And if you want to look at a lot of different charts and updates, which we are putting out on a regular basis, please do look at the Patreon. The link is given in the description below. So you can jump early next month and pay for a year, so you get off around 16%. That's the max. So if you want to take benefit of this upcoming run, where a lot of different assets are going to run freaking high, you can do that. Just take that decision whether you want to go look at what's happening in the macro and you want to prepare yourself to be on the top 10% when the free money flows in. Get that position. Position yourself well in the market. Sit back, relax. There will be a lot of panic scenarios, but don't stress yourselves out. Have that confidence, have that mental stability. You're going to make this. So guys, I'll meet you on the next video. Bye for now.